In this case, the price decline ended with a so-called piercing pattern. In this video, we're going to take a look at what the piercing pattern is, how it looks like, and why it is important in trading. So yeah guys, without further ado, let's jump right into the lesson. Alright, so first of all, let's zoom in here and take a look at the pattern. Alright, so the piercing pattern, what does it actually mean? Well, the piercing pattern, or the bullish piercing pattern, indicates a potential reversal. So the piercing pattern indicates a potential reversal from a bearish, that is a downwards trend, to a bullish or a upwards trend. So it is a so-called reversal pattern. And this pattern consists of two candles. So the pattern consists of two candles, and each candle can have different time periods. We say that they have different sessions, but the most common one is, for example, 1 day, that every candle is 1 day. And also, before continuing this video, if you want to learn the basic terms, the basic Japanese candlestick terms, I have a video about it and it will be linked up in the eye in the corner. So I recommend watching that one before continuing this one if you are unfamiliar with the basic candlestick terms. But yeah, now let's take a look at how the piercing pattern actually looks like. So as I said, it consists of two candles, and the first candle is a strong red candle. It looks something like this. It maybe has some shadows right here as well. Some small shadows is okay. And the second candle here opens below the red candle, but during the day the bulls take control and it managed to close deep within the red candle. So it would look something like this, for example. So we can actually right now write down some criteria which we need in order for it to be a piercing pattern. The first point here is that the first candle is a strong red one that appears at the bottom of a downtrend. Remember, we said that this was a reversal pattern. So in order for it to work, this pattern must appear at the bottom of a downtrend. We can say that it is a bullish reversal. So prior to this pattern right here, we might have had some candles that looks like this. We had a downtrend prior to the pattern, and that is important. So that is the first point here. The second point, the second candle is a green one that opens below the red one and ideally below the lower shadow. And this part right here, the blue part of the red candle, is the lower shadow. So ideally we want the opening of the green candle to be below the shadow, but traders usually consider it okay as long as the open of the green one is below the bottom of the real body of the red one, so this line right here. But the important part here is that the green one opens below the real body of the red one. The third point is also important. Point 3 here says that the green candle must close above the middle of the red one. So if we take a look at around here is the middle of the red one. So we need our green candle to close above this dotted line. And we can see that in this example, it closes above the line. So it is a piercing pattern. If all these points are in check, we know that the pattern is a so-called piercing pattern. Now let's shift our attention to some factors that makes the piercing pattern weaker or stronger. So we can write here, so factors that makes the piercing pattern strong. Okay, so first of all here, the greater the degree of penetration into the red candle, the stronger. And what I mean by degree of penetration is this. I can try to demonstrate it here. If we have a red candle and we have a green candle that opens below here and just barely penetrates into 50% of the red candle. In this case, we can say that the penetration part is this blue part right here. But if we instead have something that looks like this, we have a red candle here and we have a green candle that penetrates almost up to the top of the red candle. In this case, we have a much deeper penetration, and the greater or the deeper the penetration into the candle, the stronger the piercing pattern becomes, and the stronger the bullish momentum from the pattern will likely be. Another factor is if the green candle opens below support. So let's say that we have a support line right here, a dotted line, and we have a red candle right here. If the green candle opens below the support line, and then during the day the bulls take control again and closes the day above the support line, then this reinforces the support line and makes the pattern stronger. We have one more point here, and that point is that is high volume on the green session, and it is especially important in the opening. The green candle has a high volume. That means that we have many buyers entering the position, and that means that we have a stronger force behind the move. So a stronger force behind a bullish move, in this case the piercing pattern, is bullish. You can imagine everyone that bought in the opening here is already in a good surplus when it closes. Also, everyone who bought at the close of the red candle is also, after the green session, is also in a trading surplus. But alright guys, I think we are now ready to take a look at some real life charts. But before doing that, I just want to give a quick disclaimer that everything in this video is only for educational purposes, and nothing should be considered ever as financial advice. So yeah, I think now we are ready to look at some charts here. Alright, so let's start off by taking a look at, this is Coca-Cola, a stock I think you are all familiar with. And can you spot the piercing pattern on this screen? Well, I can give you a hint. We had a pretty clear downtrend right here. And what did the downtrend end with? Well, right here we have a piercing pattern, right? Why is this a piercing pattern? Well, first of all, it appeared after a downtrend. It had a strong red candle right here, and then followed by a green candle that opened below the red one and closed above 50% of the previous red candle. So all the criteria for the piercing pattern is met in this case, and we can actually see that this pattern right here marked the end of this downtrend, and after this pattern it went sideways for a while, and then the trend continued to the upside. Alright, we're going to take a look at one more example in this one. In this one, we're taking a look at Exxon, a US stock. And can you try to spot the piercing pattern here? Well, we had a decline. At the bottom of this decline right here, a piercing pattern appeared right here, right? Does it meet the criteria for a piercing pattern? Well, first of all, it appeared after a decline. It started with a red strong candle right here, followed by a green candle that opened below and closed above 50% of the red one. So all the criteria here is met, and this actually marked the bottom of this downtrend. It pretty much looked like a crash, and after this the stock rebound very sharply. And yeah, alright guys, so this is pretty much it for this one. If you found any help or value out of it, please consider dropping a like, and if you guys want to see more similar videos, don't hesitate to subscribe and hit that notification bell. I hope you guys have a great day, and I will hopefully catch you in the next video. But for now, take care guys, ciao ciao.